Hi, welcome to PropW Academy. Today we'll be covering risk management and position sizing. Let's get started. Most traders hunt for perfect entries. The truth is, surviving and growing your account depends far more on how you manage risk than on any single trade. Today we'll cover stop loss, take profit, risk, reward, position sizing, and volatility adjustments. I'll walk you step by step and show live examples on PropW so you can turn ideas into disciplined trades that protect capital and compound gains. You will ask me now why risk management comes first. Okay, because trading is a probability game. Even the best setups fail sometimes. Risk management is the insurance that keeps you in the market after losses. A single uncontrolled loss can erase months of progress. Consistent traders design trades so no single loss threatens the account. That mindset, protect first, seek profit second, is your competitive edge. Let's start now by explaining what stop loss is and how to use it correctly. A stop loss order limits your losses and should be placed logically. Options for placing a stop loss order include exceeding recent highs, lows, exceeding structure or support, resistance. For example, here, the price is trading between two ranges limited by support and resistance. In this case, if the trade is a short trade, we place the stop loss above the resistance level. If it breaks upward, we've protected ourselves from a larger loss. In this example, the price is also trading between two ranges limited by support and resistance. In this case, if the trade is a long trade, we place the stop loss below the support level. If it breaks downward, we protect ourselves from a larger loss. Or using volatility barriers such as the average range trend, ATR. Avoid using random percentage stop loss orders and place your stop loss at candle closes rather than at the price, as we'll explain in an example on the PropW platform later. Now let's move on. Take profit. Take profit is not greed. It's discipline. Define your target based on next support, resistance, measured moves, or Fibonacci extensions. Consider scaling out. Take a partial profit at first target and let the remainder run with a trailing stop. Predefining targets removes emotional exits and preserves your risk-reward logic. We will then move on to learn about the risk-reward ratio. Always calculate risk-reward before entering. Aim for setups with at least 1.5 to 1 or 2 to 1 reward to risk, so your winners cover losers over time. Example, risk $100 to make $200, 2 to 1. With a 40% win rate, a 2 to 1 system can still be profitable. Combine risk, reward with win rate to understand expected value. This is how you grow an edge that compounds over many trades. As for position size, it converts the risk base into a specific trade size according to the following steps. Choose the risk percentage per trade, common range, 0.5 to 2%. Measure the stop loss distance in price or pips. Calculate the units, contracts so that the stop loss distance x units approximately equals dollar risk. Example, $10,000 account, 1% risk equals $100. If the stop loss distance is 50 cents per share, buy 200 shares. Okay, my friends, we are now done with the theoretical information. Let us now move on to the practical application on our platform, PropW. As usual, we go first to the PropW website, which you can find in the video description. I will start by covering the right part of the screen and explaining, and you will tell me at the end what type of trade you will take from here, long or short. We start with the first step, which is identifying the closest support and resistance to the current price. Now, as we learned in previous lessons, we will see the volume corresponding to the price to confirm the trend and know its strength. We'll zoom in to get a clearer and easier view of the volume. As we can see here, we have low buying volume, which indicates a decline in buying power and is evidence of an imminent trend reversal. Now, with this information, let's return to our question. Will you open a long or short trade? Remember that the price has reached resistance and the buying volume is declining. Make your decision. Exactly, we'll open a short trade. Now, let's apply the theoretical information we learned a little while ago. We'll take profit at the nearest support line and place a stop loss above the resistance line. Now, let's remove the cover and see the result. As you can see, we have an excellent result here. As we discussed in the lesson, the trade reached the target at support. This concludes our example. Don't forget to practice several examples before starting real trading. Thanks for watching. I hope you found this lesson helpful. Don't forget to check out other PropW Academy videos for more tips and strategies. See you next lesson.